Hi guys, and welcome to this top-down analysis for Pound USD. So yeah, one of the guys in the mentorship group asked me a few questions regarding Pound USD as we are going into the Bank of England rate decision. So first things first, this is going to be my own personal top-down analysis right from the onset, not to say I've planned what I'm gonna discuss with you guys here, what I'm going to outline. So basically, it's like my own approach to the market or to an asset that I'll be looking to participate in. I'm not saying I'm gonna trade Pound USD or I'm gonna do some trades on it. It's just my own personal analysis. So now, whenever I start to look at an asset or a currency pair, I always start from a higher time frame perspective, and there's a couple of things that I look at before I even start digging down into technical analysis. Now, we all know currently the market is being driven by one most influential aspect, which is the interest rates. Now, the interest rates are the single most influential mover of price in terms of currency pairs or as far as commodities are concerned. So when you look at Pound USD, right, you definitely need to be aware of what the Bank of England will do in regards to their rate decision. Now, we've got Bank of England tomorrow on the calendar. So I'm just going to go to the calendar quickly so that we can see what the market sentiment is, what the consensus is in regards to the BOE rate decision. So you can see here, we've got Bank of England tomorrow at 2 p.m., right? There's quite a lot. And you can see here, 9 have voted for a rate hike, right? In February, which is tomorrow, their rate decision. So the expectancy of a rate hike from 0.25 to 0.5% is 90%, right? Now, with these numbers here, remember guys, this is fundamentals. It's what they want you to see. Always have that part of you that should ask the question, what if, right? What if they don't cut the rates? You see, there's nothing wrong in asking yourself that kind of question. So now, once we have this consensus here, which is leaning towards a rate increase, right, for the pound. Now, what does a rate increase do to a currency of a country, right? An increase in the interest rates is going to affect the bond market. The yield is going to also rise, right? Now, what happens when a country has got higher yields, right? A country that has got higher yields is going to attract more investment, meaning the currency pair is going to appreciate, right? So with the consensus that we have for tomorrow's BOE rate decision, we expect pound to expand to the upside. Now, that's number one, the rate decision. Number two, you need to look at intermarket analysis. That's the second thing that I look at. Like, what else can affect the pound? Obviously, fundamentals from the United States, they're going to affect the pound USD pair. Now, when we talk of dollar, we are in a very huge bullish higher time frame bias. Dollar is actually very strong on a monthly and weekly time frames. That makes pound weaker on those time frames. We'll be expecting pound to be in a downtrend or in a bearish momentum to the downside. Now, those two aspects that I've highlighted, one, interest rates, two, intermarket analysis, they're crucial now when you transpose to your technical chart, which in this case we're looking at pound USD monthly chart. Now, whenever I go to a monthly chart, guys, to mark my levels on the monthly chart to see where is price in relation to the structure that's currently on the asset, which is pound USD. Right now, you can see we had a huge drop. Then there was a range that was created here. Then we dropped again, then created another range, right? Currently, pound traded away from the range high of this level here. You see, this is just basics. You see, this is basic. As a trader, you should be in a position to do just these basics so that you have at least an understanding of where the market is, right? So now, since we've got this price range here and market is trading away from the range high, since most probably around, I think last year, February, March, pound is bearish, right? You can clearly say pound is bearish on a monthly chart. So now I need to just highlight my monthly levels to guide me in understanding where price is. That's why I switch to the monthly chart. Now, when I switch to the monthly chart, I'm going to grab my line 2. You can clearly see we've got these two highs here, right? So in relation to current price, this is the earliest high that I've got for my reference point. So I'm going to mark that high. Now, to the downside, right, I need to mark out a low in reference to current market price. And that low is coming in right here. You can see the low here. Let me just zoom in a bit. This is the low that I'm talking about right there. This is where price found support. It was an old highs level. It's like a pivot point. Once we break to the upside, we're going high. Once we break this level to the downside, we are going low. And then I also need to highlight the lowest low in relation to current market price. We're looking at this level down here and also this one. Now, with that being done, right, with that said, you can clearly see I've got a range here in terms of my price action. That's a range high, that's a range low, right? Once I've done that, once I've highlighted that range, I would like to highlight my equilibrium point. I'm just going to grab my fibs, range high to range low, range high to range low. Now remember, this is my own perspective, right, from the word go, not that I planned to do this. And then I'm going to make it a dotted line. So remember, the red line represents my equilibrium point. The red line represents my equilibrium point. I just need to highlight them again. This low here, I think I've deleted the line by mistake. So I'm going to highlight it again. Why am I highlighting this low? Right? Because this is where we last seen a market turn to the upside, a short-term push to the upside, but you can see we're not clearing any old highs on the monthly chart. Now remember, on the monthly chart, your reference point when you're doing top-down analysis is the 9 to 18 month profile, right? So I'm going to switch to the line chart. Now, when I switch to the line chart, I need to highlight my 9 to 18 month profile. So we're in February right now. So my 9 to 18 month profile is going to come right here. See this bullish candle before the drop? That is my 9 to 18 month profile of this range. And the red line represents my equilibrium point of the range. You can see how price found support when it traded to equilibrium and it's trying to push to the upside, but we are fading to trade above these old highs, right? Now, the fact that January traded above December's high means we're the short-term high in our market structure, right? Meaning we can be looking to go, can push a bit to the upside, but breaking above January's high might be a bit difficult. Now, the 9 to 18 month profile, what do we see in terms of market structure? You can see from the 18th month candle, which is this last up close candle, which became a bearish order block right here. This candle traded back to its equilibrium point, found resistance, and it dropped 233 pips. And when we closed above, you see, when we closed above our equilibrium point, price rallied back to the highs. Now, reading this market structure on its own is not much of a significance. It's just giving you a guideline. You see, it's giving me a guideline on what to expect. So I am above my equilibrium point, right? In this range here. And this range started all the way back from June 2016 up to right now. That range is being respected whenever price trades to the highs or to the lows. Now we are above the equilibrium point of the range, meaning we are in premium, right? Price is in premium already. By just defining that consensus, if we are in premium, what is it that you look for? You look for shorting opportunities, right? Now, this is only on a monthly chart, guys. So on a monthly chart, we are looking to see pound USD trade lower. Now, which low is it going to trade to? Where is price likely to be attracted to? We've got this low here, right? Now, below this low, we've got internal range liquidity in the form of sell stops. Above the high, that's external range. Below the low, that's external range, sell stops, external range, buy stops. Now I'm just going to remove this gray shaded line. Then I'm going to highlight this low here. Now this low is coming in at, let me just give it a rough price point so that we can see what we are talking about. So that's 31598. That makes it 316 institutional price point 316. So that's 316. There is internal range liquidity in the form of sell stops. Now, if we are to anticipate price to rally to the upside, the high of January, which came in at 1.37482, there's also liquidity there in the form of buy stops, internal range liquidity in the form of buy stops. So we've got 37485. I'm just going to put it to a round number, which is an institutional price point. So it's 580, right? 137580 and 131600. Both sides of those markets, we've got liquidity. Now, if on a monthly chart, I'm looking to short, where am I likely to trade short from? Now, this is where you start now highlighting your premium and discount areas. Now, if you're looking to go short, you need to be in a position to highlight your premium arrays. So first, we've got this last up candle here, which was broken to the downside the following month. That's our bearish order block. And if you look closely, this last up candle here, just gonna highlight it, and that's the main threshold of the bearish order block. That's our main threshold. This is a bearish order block, right? Market traded up the following month, which is November, traded lower back to equilibrium, validated this block here as our bearish order block. You can see price came, dropped big time. We had a drop of almost 200 pips in the month of January. Right? If you catch the top, if you traded from the top, that's a lot. That's almost close to 400 pips. So currently we are trading right at the 50% mean threshold of this bearish order block, and we've got Bank of England on the calendar. Now, I've highlighted two premium areas that I'm expecting to trade from. Higher time frame monthly, I'm looking to short the market, but it will be a different picture when I go to say weekly, daily, and H4. Now, if I'm to short from these premium areas here in the form of bearish order block, what's my target? Target is 1.31600. That's a target on a monthly chart for your short positions, right? Shorting from a premium array, targeting a discount, an old low, a discount array in the form of an old low. Now, that's I think that's pretty much for the monthly chart. I don't know if there's anything that I missed in regards to the 9 to 18 month profile. We can see market is struggling to break to the upside. That's a market which is pushing lower. Up candles are providing resistance, and these down these up close candles, they are providing resistance, and they are seeing not even close to any support at all. They are being broken to the downside. You can see 1, 2, 3. We haven't broken to the upside of any of those bullish candles and closed above. Only this month, which is like 2 days old, is broken to the upside of December's high, but this month has still got a long way to go. I won't be surprised if this candle close bearish, heading towards 1.3160. Now, once we've done that, there's nothing interesting more to highlight on the monthly chart that I can see this moment in time. So I'm going to drop down now to weekly. Now, remember, already I've made a decision that this price action, this asset is trading more to the downside. And you can see here, huge moves are happening going to the downside, right? Are the up candles providing resistance? Are the up candles being broken to the downside and price expand bearish? Yes, they are. Now remember, this gray shaded area, these are our monthly bearish order block, right? Now, when we are on the weekly chart now, this is where things become interesting now. This is our weekly chart. What is it that we need to see for a clear run for bulls to take the price to the upside? We need a close above, break and close above 1.37580. Are we going to get that? You can never say never with the market, you see. So you cannot say no, the market cannot close above. You can never say never. The market will surprise you. But that is what we need to see. We need to see price breaking above 1.37580. Now, 1.37580. Look what happened here. What interesting feature of price action happened here. It found resistance inside this imbalance here, which was our monthly bearish order block, right? Price found resistance and it dropped 273 pips in 2 weeks. Now, this is the third week and we've traded back. Now we are on the main threshold of that monthly bearish order block. What are the chances that price is going to find resistance? I'm not sure, or rather I should say, no, I don't know if price is going to find resistance. Now, that's where you now need to bring in your fundamental aspect into the picture. Bank of England on the cards tomorrow, and most people are expecting them to what? To raise the rates. Now, if they raise the rates, what do you think pound USD is going to do? It's going to rally. That makes 1.375 quite interesting, right? For your targets on long entries, because if they do increase the rates, then we should see pound USD having a sustained rally to the upside. But remember, on a higher time frame, you are in a bearish order flow. You've got a monthly bearish order flow on the monthly chart. Price finding resistance in monthly bearish order blocks. Now, on the weekly chart, you also do the same. You highlight your liquidity, right? We've got last week's low. There's liquidity here in the form of sell stops. We've got liquidity in the form of sell stops at right around 1.33550. Just gonna put an institutional price point there, guys. Now remember, this is a random analysis of this pair. 1.33500 gives us a target for our shorting opportunities. From the current levels to this level, you're looking at a return of close to 200 or so pips. Now, we've got this short-term low that was created, and we still have the high of our range up here. And we are in that price action where we're expecting shorting opportunities. That makes this our swing high and this our swing low, where the low formed a higher low, lower low, higher low. That's a swing low. We had a higher low, higher high, higher low. That's a swing high. Now, if we grab our fibs from high to low, right? If we grab our fibs from high to low, I just need to define my premium range in respect to the current swing point. This is now on the weekly chart. So I'll be anticipating price to reach in this range. This will be my ideal level for me to hunt for shorting opportunities on pound USD. Of course, the Bank of England is on the calendar, and you don't really wanna gamble that much with the rate decisions, right? Remember, they give you a guideline of how to trade the markets for the next 3-4 months. So basically the next quarter. So you can see I've got my premium range here. I'm just gonna highlight it quickly. So that's my premium range where I expect price to find huge resistance and trade lower. I am bearish on pound USD. Number one, interest rates. Number two, Bank of England. Dollar index bullish momentum to the upside. So my premium range, you can see where it is located for the pound USD. This is where I enter the market with more confidence that price is definitely going to find resistance and trade lower. But when we go into this lower time frame, take note, the gray shaded area, that's our monthly bearish order block. Now, inside that monthly bearish order block, we've got this weekly bearish order block. Well, let me give it a different color so that we can see what we are talking about. Right, that's our weekly bearish order block, which is where price is currently trading in at. Already, when we look at our swing trading class, MWD, sequential, monthly, weekly, and daily, we already have a monthly that's bearish, a weekly that's bearish, right? So now we're gonna go on to the daily time frame. Now on the daily time frame, this is where now you need to also define where price is in terms of your momentum. If we have had a monthly that's bearish, a weekly that's bearish, daily you can see daily is bullish. 1, 2, 3, 4 candles bullish on the daily time frame. That's Thursday, Friday, Monday, and Tuesday, Wednesday. So that's Wednesday, Tuesday, Monday, and Friday. Pound USD is bullish. So we've got MWD, which is not sequential. MW, they're all bearish, but D is bullish. Now, what do we do in that scenario? We only short from weekly premium areas, right? You short the daily time frame once it trades into a weekly or monthly premium area, which is where it is right now. So inside the weekly bearish order block, we've got this bullish order block right here, right? We've got this bullish order block. The fact that I'm marking out all this price action, guys, is because once we get to a lower time frame, such as an H1 and H4, that's where you make a decision according to the fundamental that would have come out. If they do increase the rates, then we should have market have a clear run into this imbalance here, right? We've got this imbalance on daily. We should have price having a clear run or even break above the monthly bullish bearish order block. Sorry, we should have price close above the monthly bearish order block, but it's not going to be that easy, guys, for us to trade and close above 1.348. It's not going to be that easy, but it can happen. And fundamentals like the interest rate markets, they can have that kind of effect. So looking ahead to tomorrow, right? What is it that you're supposed to do? What is it that you're supposed to look out for in tomorrow's price action? I'm expecting price to find resistance here in this range, right? I'm expecting price to find resistance. Yes, it might shoot to the upside during the initial release of the rate decision. Price might find huge rally, which could rally into this level here, but I don't see it going all the way above, right? If we do break above 1.366, right, then there's nothing that will stop it trading to these levels, which they will definitely find resistance, right? But remember, like I said, always have that side of your analysis where you ask yourself, what if? Now, my what if on pound USD is this: what if the rate increase has already been priced in? You see, what if the rate increase for the Bank of England has already been priced in on that rally? Take note, yesterday's price action, I mentioned that pound is quite strong at a time when euro was not showing any signs of being strong. Same applies with Aussie dollar, New Zealand dollar. Those pairs were quite strong in relation to euro. But today we've seen them continue their rally to the upside. That was also facilitated with a negative number for the ADP non-farm employment numbers that came out from the United States. So once we realized that, once I saw that, okay, pound is quite strong, you see, I have to ask myself, what if this rally is already priced in the rate hike from Bank of England? What I mean by priced in, it means the move has already been initiated. The traders have already initiated the rally in anticipation of the rate increase from Bank of England. In that sense now, irrespective, once the rate decision has been published, you might not see pound USD rally that much. Yes, there's going to be stop hands. Big spikes. Big spikes are going to happen either way, especially on lower time frames. I'm just going to go to H1 quickly. Big spikes are going to happen, especially this level here is vulnerable during the rate decision release. 1.36616 is vulnerable, but it depends with the price action leading into that decision. You can see here, price is facing a bit of a stiff resistance from the base here inside the weekly bearish order block. Now, this is our daily bearish order block, gray shaded area. So we could see price do this. Could see price trade in here and found resistance, or if it trades into this level heading into London open tomorrow, we could find resistance back to 1.3572. What is 1.3572? Right, let's just go back to the weekly chart. You can see 1.3572. Let me go to the monthly. That is the main threshold of our monthly bearish order block. Can you see? Then we've got 1.366 just above our main threshold. So when we go back to the lower time frame, this level here is our monthly bearish order blocks equilibrium point. Expect price to hover around this level. You see, expect price to play around this level here, leading into the rate decision. You see, so we could see a very strong resistance heading into London session, right? And we might test these lows here heading into London session. Then during the rate decision, could see price spike again into that monthly bearish order blocks equilibrium point, but ending the week down to the downside, right? But if we do break above just after London open tomorrow, remember we've got some other fundamentals on the calendar for pound. That's it, 11:30. We've got the PMI numbers for pound. They'll definitely move pound. Now, if these PMI numbers for the pound come out positive, that makes this level interesting now in our trades. Positive number for the pound, then we expect price to break above, probably test this daily bearish order block. Negative number for the pound, then for those PMIs for pound, negative numbers, then you expect this main threshold of the monthly bearish order block to provide resistance and price push to the downside. Now I'm going to go to H4. Now to the downside, where would it likely to trade from? If the number is negative, the PMIs that we're going to get at 11:30, if they're negative and we're still playing around 1.372, then expect this imbalance to be filled, right? We've got market inefficiency there. Expect that imbalance to be filled, right? And once it's filled, then you wait for the rate decision. And if you're shorting on a negative PMI number, hold that position heading into 2 o'clock, right? You see how you have to approach the market heading into 2 o'clock. If the number comes out negative, you're shorting pound USD heading into the rate decision. By the time 2 o'clock comes, if the PMI numbers come out negative, then we are going to see pound trade to the downside. Now, if the PMI numbers comes out positive, then expect pound to trade into this daily bearish order block. You see, this daily bearish order block will definitely provide what? Resistance. But where is your target? Now, if the number comes out positive, then you're looking for price to rebalance this market inefficiency here. You see, if the PMIs for pound come out positive, then expect IPDA to rally to the upside, deliver price, and balance this market inefficiency. Now, this market inefficiency, guys, you can clearly see where it's located. It's located inside our monthly bearish order block, and it's just also inside our weekly bearish order block, our daily bearish order block. Now, this is a range which is going to be quite interesting when Bank of England is now on the calendar. This range in price action is going to be very interesting. This could be where the market is heading, right? Even during the Bank of England rate decision. So we're talking about the positive PMIs, right? Positive PMIs, that's where price is gonna trade into. If we do trade into this range after a positive PMI for the Great Britain, then during the Bank of England, price will likely trade into 1.36616 and take out that internal range liquidity above 1.366. You see, that's how you should approach the market. Don't approach the market without any clear picture of what's going on. I was not looking to trade pound USD, as you all know. I'm not much of a fan, but it's easy for me to trade pound USD once I have my bias on Euro USD outlined. So looking ahead to tomorrow, I'm going to do some practice trades on pound USD, and I'm going to also be guiding you guys in the channel, in the Telegram group. Oh yeah, if you're not in the mentorship group, guys, this video is for the mentorship group. So you might see it later on in the week or sometime next week once the price action has panned out, negative or positive. I'll make it public, but for now it's only for the mentorship group. So you can get in touch if you want to join the mentorship group. So this is what I'm saying, how you should approach your market if you're looking to trade pound USD. So let's see how this price action unfolds tomorrow, and we will be discussing it in the group during the rate decision for Bank of England. So yeah, that's pretty much about it from a top-down analysis point of view of pound USD. One of the guys in the group asked me, like, what is it really we should be looking out for in regards to pound USD as we heading closer to BOE rate decision. So yeah, this is my consensus. I'll be looking for those options once I get the fundamentals. I cannot say I'm going to short pound during rate decisions. No. If they're anticipating a rate hike, I need to be on the sideline. And then I see, because on a monthly chart, I'm looking to short, and there's levels that I've highlighted. And right now, pound is in premium. It's in a level where you should expect it to find huge resistance. And I wouldn't want to go long at a level where it's likely to find resistance. That is suicide. So yeah, that's pretty much about it, folks. So we carry on tomorrow again and see how price would trade, how IPDA is going to deliver the price. So yeah, I wish you guys good luck and happy trading. Thank you.